ready, go!
Once upon a time, it was all fun and games. NVIDIA started off by making chips for video game machines. Graphics became serious business when people started using NVIDIA for blockbuster movies, medical imaging devices, and the world's most powerful supercomputers. And then one day, researchers discovered that our technology was perfect for AI. Today, NVIDIA is the engine of AI. Engineering the most advanced chips and systems, and the software that makes them sing. So robots can lend us a hand. Cars can drive themselves. And even the Earth can have a digital twin. We live to tackle the world's biggest challenges. And don't worry, we still love our fun and games.
Coming up in today's review, stocks start the week lower, along with Nvidia falling, ahead of its earnings report tomorrow. What happens if they disappoint? I'll dive into the technicals and what the options market is telling us. We'll look at what stocks hedge funds have been buying. Walmart closes at a new high after earnings, and the first Neuralink brain chip patient successfully recovers. Hey, what's up guys? Welcome back to the Click Capital Daily Market Review. Hope you all had a great long weekend. And I just want to start off by saying a huge thank you to everyone who bought my course last week. It was a record promotion for the Click Capital channel, and I've been receiving lots of great feedback, so thanks once again to everybody who gave that a chance. And what an interesting week we've got on Wall Street ahead of us, with probably the most anticipated earnings event in many years. That's Nvidia, the largest AI company in the world, scheduled to report earnings after close tomorrow, and we already got a pretty big move going into it. With it coming off a bit here today, finishing down almost 4%, and we had some pretty big moves out there in the tech space like Oracle and Adobe, continuing to fall on the back of OpenAI's new product Sora, and the launch of their new AI product, which the market didn't really seem to take too well. Looking across the rest of the market, it was quite checkered breadth, with no real sector too bullish or bearish overall. And there's a look at the S&P 500, just closing at 49.75, and the Super 6 tech stocks finishing down the most, 1.77% collectively. We've got the VIX continuing to wake up a bit here today to 15.4. Slight pullback in bond yields, and we're getting quite a bit of volatility in the hottest stocks out there. ARM Holdings down over 5% today. Supermicro was down almost 15%. At one point today, before the dip was bought just below $700 a share, then rallied up into the close, still finishing down about 2%. We had Tesla falling a bit here as well, down over 3%. A few falls in the crypto-related stocks as well. Marathon Digital down 9%. Coinbase down almost 4%. DraftKings down over 7%. And the elephant in the room, the number one hottest stock, most traded liquid asset across financial markets today, NVIDIA, down 4.3% and falling a bit here after hours as I speak. It's going down to a 5-minute chart. We're still selling off going into the big event tomorrow afternoon, and that is their earnings. So this was a pretty big move going into earnings tomorrow. Obviously the stock has already had quite the run. Going up to Friday close, we're up 47% year to date. So the market was already full of expectation going into tomorrow. And Wall Street analysts are expecting them to report $4.59 in earnings, no doubt, which they'll beat like they've done the last couple of quarters. In November, they reported $4.02. That was a 19% beat. Prior to that, in August, they reported $2.70. That was a 29% beat. And then in May last year, they reported $1.09. That was an 18% beat. So no doubt they're going to beat. Jensen Huang is going to do his magic and talk it up really good. However, all of that doesn't really matter. The market can do anything, no matter what the numbers and guidance are. And so there's quite the expectation going into it. And it looks like the market has kind of already had a reaction to the earnings and is letting out a bit of hot air going into it. And so since everyone's on the edge of their seats waiting for this earnings report, market's really on edge. This could get things moving moving one way or another tomorrow. What sort of move could we expect from Nvidia after they release earnings tomorrow going into Thursday morning's open? Well, a good way to work out the market's expectations of what sort of move we could see tomorrow going into Thursday's open is to look at the options market. And so we can look at the first options expiry after earnings, which is this Friday the 23rd. And there's 3 different ways you can work out what the expected move is just by looking at the options chain for this Friday. The first is looking at an at-the-money straddle. That's both long a call and put. Multiply that by 85% and then divide by the stock price. So currently we're trading around 682. So just looking at the 682.50 strike, we can see the call option costs about 43.70 and the midpoint on the put option is about 31. So that's 74.70. Divide that by 85%, that's 63.49, and divide that by the stock price. 682. So that's 0.093. So that's about a 9.31%. An easier way to do it is by taking the implied volatility of at-the-money options and just dividing that by 16. So here I can see we're around 149% IV. So 149 divided by 16. That's 9.31. Well, my preferred way is just to take IV divided by 100, multiply that by 6. So that'd be 1.49 multiplied by 6. So about 8.94. And looking at those other twos, they were low 9s. So that's just a rough rule of thumb. It's not a perfect science, but that just gives you an idea of what the options market, which is really efficient, and their expectations of what sort of move we could get up or down tomorrow from Nvidia. Okay, so back to the stock chart, and just to visualize what the options market is expecting, the sort of move we're going to get into Thursday's open. We'll start off where we are now, around 682, about 9%, a little bit more than 9% on the upside, and a little bit more than 9% on the downside there. So down on the downside, that's about 620. On the upside, there's about 745. Okay, so that's the implied move from the options market tomorrow. Saying Nvidia could get up to 745. It could get down to 620. And there's a lot of people in anticipation of this. A lot of people are saying, oh, it's going to rocket. This thing's on an unstoppable path to $1,000 a share. Other people are saying, nah, it's too overcooked. It's going to sell off. This is a buy the rumor, sell the news event. The thing is with options, it's like insurance. And just like insurance, there's a premium built in to compensate the seller over time for the risk that they take on. And so on average, options market always overestimates the moves that we get from stocks. Not all the time, but most of the time. And we've seen that with Nvidia in the past. Options market overestimated Nvidia's stock earnings move 67% of the time in the last 12 quarters. The predicted move after earnings announcement was 7.1% on average versus an average of the actual earnings move of 6.7%. So what that means is, on average, the options market predicts it'll move a bit over 7%, whereas in reality, it moves about 6.7% the day after earnings. So this time, it's even more anticipated, which I would say is fair. There's a lot of action, volatility, participation, and we very well could get that big outsized move tomorrow, even more than the 9% that the market is expecting, which would be a pretty big deal. However, with so many people predicting it's going to rocket or crash, I think it could be just as likely to give us a nothing burger result and just be up or down 2 or 3% and end up disappointing everybody. So I wouldn't be surprised if we're just trading around 680 or so tomorrow, and all those people buying premium, betting on it one way or another, could be hugely disappointed once we get that huge IV crash. And what a whopper it was today in the options market. 2.59 billion in call options traded, 2.77 billion in notional value of put options traded. So there was a bit more puts bought today than calls. And looking at trading in the common was huge as well. 48.2 billion shares traded today, more than Tesla, and the options volume came in at multiples of the S&P 500 as well. So it looks like everybody and their dog has a position in Nvidia going into tomorrow. And like I said, all these option buyers, both calls and puts, bulls and bears, could be disappointed if we just do something like this. And like I said, just as likely to get a nothing burger result. However, what would happen if we were to get something like this? That could really get things moving in the market. Maybe if they surprised and didn't beat earnings expectations, maybe they came out with a new problem, something to do with China, the US government, or maybe big money just uses it as a liquidity event to exit. Well, if that were to happen, then we shouldn't be surprised to see the S&P and Nasdaq have its biggest down day in possibly years, as there's so much hype and expectation built into this AI-fueled rally that if they don't absolutely blow it out on numbers and guidance, market could get really disappointed, and that could cascade into something else, because they really have been the leader of the pack when it comes to this semiconductor chip AI rally that's been amplified so far this year. We've seen record options volume, call options, people just piling into betting on it going higher and higher. And that's why we've got demand for out-of-the-money call options. Getting back to the 2021 meme stock era lows. That's showing up in the single stock skew we can see here in the grey line. Falling down here basically means lots of people are loading into out-of-the-money call options. Betting prices can go higher and higher. And usually when we see this kind of activity, it doesn't always end well. Everybody doesn't always get what they want. And who knows, maybe the run-up isn't over yet. Maybe Nvidia can rocket up to $1,000. And maybe all these journalists saying the AI party is just getting started are right. And all these out-of-the-money call option buyers will get rewarded after all. Either way, it's going to be interesting. And what the street is looking for is the demand for its signature product. The AI-enabled H100 GPU chips, which can sell for upwards of $40,000. They'll be looking for its planned product roadmap. And for the quarter, the street's looking for $20.4 billion in revenue, about $4.60 in adjusted earnings per share, and a huge gross margin of 75%. And whatever the result we do get tomorrow afternoon, it's likely to spill over into these other hot stocks like Supermicro Computer, which has been on a huge tear this year as well. And we've still got analysts out there saying we're not done yet. We could hit $1,300 a share. And with some others saying this bubble's not like the others we've seen before. Markets are not reflecting any obvious signs of high and rising leverage. The amount of margin debt relative to the size of the stock market is smaller than past bubbles, and that today's stock market is nowhere near the bubble extremes of 1999, with some comparing Nvidia to Cisco in the late 90s, which had a huge monster run-up before it crashed, with some drawing comparisons showing Nvidia has to 3x in 433 days to be at dot-com bubble levels. And who knows, like I always say, anything's possible in the stock market in the short term, as crowds can do crazy things. Either way, get your popcorn ready. It could be an interesting one, or maybe not. Like I said, maybe it just turns out to be a nothing burger and we're just down or up 2 or 3%. Either way, make sure you come back to the Click Capital channel tomorrow and we'll dive into the numbers and, more importantly, the market's reaction to it. Just moving on with the daily review, and we're just getting a bit of a peek at what some of the biggest hedge funds are buying and selling, as they're required by law to file 13F forms after every quarter showing their big moves. And just looking at Ken Griffin's Sidel, some of his largest positions were in Meta Platforms, AT&T, Eli Lilly, Amazon, and Citigroup. So a pretty diversified group. Got another hedge fund, Millennium. Some of its biggest positions in Cigna Group, TJX, Progressive, and DE Shaw, where Amazon's founder Jeff Bezos used to work before he founded Amazon. Their biggest positions, Micron Technology, Netflix, and Chipotle. Then we've got the owner of the New York Mets, Steve Cohen, and his .72. He's getting into oil. Some new big bets with energy giants Shell and Exxon. Added some new bets in software Oracle and HubSpot. Increased positions in Clorox, along with some defense contractors and a few others as well. And as we get to the back end of Q4 earnings season, we just heard from America's largest employer, Walmart, with its stock rising to a new all-time high. On the back of better than expected earnings, dividend boost, news they're going to acquire TV manufacturer Vizio, and ahead of their stock split scheduled for next week. So while we've seen some other retailers report softer than expected earnings, Walmart can hold up a bit better in an environment where the cost of living is still high for many consumers, as they're a value-focused retailer. And that's why they're still able to grow their sales by 5.7% from a year earlier, ahead of analysts' expectations. And the CFO said we're not immune to the whims of the economy, and certainly there are economic outcomes that could cause us to move to the high end of the range or the low end of the range. But given where we are right now, going into the first part of this year, we feel really good about the plan. And there's a look at the daily stock price of Walmart, closing up 3.2%. However, the retail sector overall was still down 0.72%, with Target trading a little higher, along with Costco as well. And just a bit of interesting news for you guys today. One of Elon Musk's company, Neuralink, just recently planted its first brain chip into its first patient. Apparently they've made a full recovery, and now the patient can control a computer mouse just by thinking. With him going on to say the patient seems to have made a full recovery with no ill effects that we are aware of, and is able to control the mouse, move the mouse around the screen just by thinking. So no doubt this could have a lot of positive impacts on disabled people and things like that. However, as you can imagine, it's highly controversial, and I don't know about you, but I'm in no rush to get a chip planted inside my brain. You can just imagine the potential downsides of this new technology. Like, what would have happened if your brain chip got hacked by someone and you just got rickrolled all day, driving you absolutely nuts? That's a no thanks from me. Just moving on with the review. Got some inflation data coming out of Canada today, coming in a little lower than expected, 2.9% year over year. Tomorrow we'll get to hear from a few Fed speakers, along with the FOMC minutes from the last Fed meeting. Should be no surprises in there. Looking out the rest of the week, on Thursday we've got some PMIs coming in, and not much else to finish the week out. Still got the market expecting the Fed to stay on hold till June before we get our first interest rate cut. And the stock market's still hanging on here, still in the greed zone at 67. But there we go again on the insiders. Pretty big increase on Friday. 238 insiders reporting selling stock, versus only 32 reporting buying. And just diving back into the chart, it's got the dollar index closing just under 104. Got Bitcoin consolidating just above 52,000 a coin. Gold having a bit of a bounce back from $2,000 an ounce. Crude oil pulling back slightly, $77 a barrel. Had a bit of a pop this last week in value versus growth, and a bit of divergence with the market on discretionary versus staples, having fallen this year. With a little bit of a defensive rotation today, thanks to those Walmart earnings, consumer staples sector was the winner today. Alphabet was the only mega cap tech stock to finish the day higher, and there's a look at Nvidia trading after hours as I speak. Currently around 683, off a little bit from the regular session close. Getting a bit of volatility here in the meme space, and we're still not out of the woods yet on New York Community Bancorp. That seems to have taken a back seat in this market, with JP Morgan still holding up there pretty good. Alright guys, there we are to start this shortened trading week off. There's a big one with Nvidia tomorrow afternoon, and it'll be interesting to see the market's reaction. Like I said, no matter what the numbers come in or its guidance, it's a big liquidity event allowing the market to make its moves, and this is no doubt going to spill on to the rest of the sector and the broader market at large. So thanks very much for tuning in today and hitting that like button, and I'll see all you guys again tomorrow night for what is the most anticipated earnings in a long time. Cheers.